What's up, traders? The market absolutely tanked, and so we're going to discuss why this happened and the plan moving forward. Now, if you're new to this channel, my name is Rashad. I am a full-time options trader, and I'm blessed to be able to bring in full-time income from trading from the stock market. Now, this is obviously not a regular video if you are already fans of the channel, because I am in Cancun, just enjoying my time. I am here at Xcaret Arte, which is kind of like a whole world inside of a jungle. I'll kind of show you guys the back of my room here, which you can see. It is very, very nice, and that doesn't even show you the half of it. But there is absolutely no point in trading or collecting wealth if it does not buy you your freedom back. So this was a trip just because, and it is trip number 7 of 8 over the last 9 weeks. But the plan is always, whenever I go on a trip, is to make enough to pay for the trip while I'm there and to also pay for the next trip. All right, I always have 2 levels of wealth, and the first one is being able to do what you want, when you want, with who you want, for how long you want. All right, so that is my first level, and then the second level is being able to bless anyone at any time with anything. But speaking of blessing people, you know I always have to start off my videos with the word of God that has to deal with money, wealth building, or business. Today's word comes from Luke 14, verses 28 through 30, and it says, "Suppose one of you wants to build a tower. Won't you first sit down and estimate the cost to see if you have enough money to complete it? For if you lay the foundation and are not able to finish it, everyone who sees it will ridicule you, saying this person began to build and wasn't able to finish." And this verse just simply talks about being prepared. And if you are a trader in this market, you should be prepared for times like this. Because one, we do not know whether this drama will last for one day or it will last for several months. However, the best thing to do in situations like this is to, one, either plant more seeds, or two, do nothing at all. All right, the beautiful thing about this situation, and we'll talk about the situation here in just a second, but we've seen this movie before, and literally we just seen this movie about 6 or 7 months ago. All right, this isn't even an old movie. We've seen this movie just earlier this year, and we know exactly how the movie ends. So because of that, we just need to act accordingly and do proper preparation. But speaking of people who are doing proper preparation, I of course have to always shout out some members of the Trader Freedom community. So first off, we have Jonathan, who says starting to love these Iron Condor orders, and we can see that he is printing money from those. And then we have Chandra, who says October feast is yummy, dishes served, SoFi, Meta, Amazon. Thanks, Rashad. I followed you on the SoFi trade, but we can see that they have printed $11,000 already here in October. Now, if you know of anybody who's looking to join a cool community and Trade to Freedom, tell them about Trade to Freedom. The link is below in the description. But not only will they get access to my actual trades, they'll get my entire options framework via the Trade to Freedom course. They'll get access to ask me questions at any given time. And lastly, they'll be within a community of other traders who all have the exact same goal. So if that intrigues you, come join us. The link is below in the description. But with that, let's get down to business. Now, I'm here on Yahoo Finance, and it says tariffs hit harder in an economic data vacuum. So we can scroll down here and we can see it says the stock market's holding pattern broke into a sharp descent Friday after President Trump said he would not meet with the Chinese leader, as scheduled in South Korea later this month. An escalation of tensions came with the threats of massive tariffs on Chinese goods because of Beijing's latest restriction on rare earth materials. The market had, for the most part, considered tariff turmoil settled, but the prospects of new levies merits new calculations, gaming out the cost of the president following through as the US-China detent comes undone. All right, so in summary, the president is threatening new tariffs on China again. And the reaction from the stock market was extreme. As we can see here, that was a huge red candle, and it took us down 2.71% in the S&P 500, and that is a very extreme move. And I was actually very shocked to see how the market reacted to this threat, because we have seen this movie all before. And we know that this movie typically ends with the president backpedaling on what he wants to do with these tariffs, which causes the market to go right back up. So who knows if this is something that lasts for a few days or it's something that lasts for a few months. However, we already know the ending to the movie. As we know, he loves to use these increased tariffs as negotiating tactics. But really, this is actually very healthy for the market, because we have really been going in a straight up direction over the last 6 months. And at some point, if we want to go higher, we do need some sort of a pullback. All right, and yesterday's move really just took out maybe a little less than the last month of gains. All right, so we ended the day at 6,552 on SPX. And if we go back, we were here just on September 11th. All right, and so that is exactly a month from today, the date of this recording. And so it did take out about a month of gains. However, you should not allow this to worry and scare you. what you should be thinking of, oh, this is going to be an amazing opportunity. All right, if we look at the last time this occurred, it was what? An amazing opportunity. All right, if we go ahead and look back, let me change this to the last 12 months. So we can see this whole tariff drama that occurred right here and compare that to where we are today. Even with yesterday's crazy move, had you purchased shares of almost any quality stock or bought leaps or sold puts and accepted assignment, you are up tremendously today compared to where it was during this time period. And that's even if you had purchased the shares or bought the calls or sold the puts on the very first day of the drama, which looks like it was about February 21st, right? Even here, the market is still way up from there. So you should look at this as an opportunity to be extremely greedy when others are fearful. Will your account go down in the short term? Probably so. But let me tell you something. If you thought that stocks were a great buy on the day before this happened, so on Thursday, then there's absolutely no reason why you should think that stocks are not a good buy the day after. You know, and it's always hilarious to me because stocks are the only thing that people get excited to pay more for. Or anything else we want a discount on, anything else we'll brag if we get a discount. If we go to a car dealership and we're able to talk them down several $1,000s, that is something that we go to our friends and we share it with and we brag about. However, with stocks, it's the opposite way, and we get more excited when we are buying shares of a stock that has already gone up tremendously versus buying shares when it has been sold off aggressively. So I'll never understand why people like spending more money on stocks, because I absolutely love a discount. Now, again, we don't know exactly how long this drama will continue, because the president could literally tweet out that he's agreed to a meeting with the Chinese president and he believes that they will come to terms, and then the market's going to turn right back upwards. All right, but when events like this occur, I like doing several things. One, I like doing either the short strangle or an iron condor on a broad-based ETF such as TQQQ. So here I am in the Moomoo platform on the options chain for TQQQ. And so for situations like this, I like going out a little further because it allows me to select even more conservative strikes. Now, when volatility increases greatly like this, it also greatly increases the premiums that you are able to collect as an option seller. And so if I were to do a short strangle or an iron condor, and do remember that this is not financial advice, nor is it a recommendation to buy, sell, or hold any equities or options contracts. All right, these are just examples and are obviously not trades that I'm entering into right at the moment. Okay, if you want to see my actual trades, then you'll need to join Trade Your Freedom community. However, what I would likely do is go somewhere further out. So maybe I go to this date that's 34 days out from now, maybe this one that's 41 days out from now. Let's go ahead and select it. And if I wanted to do a short strangle, if we look at the premium, so we can see the stock price is currently $97 here. And so I could go way far out the money and still collect a pretty decent amount of premium. All right, like look at this strike that is at $70. It is only a delta of 0.11. However, it's paying at the mid price about $200 per contract. All right, and that is almost a 30% move from where the stock price is at currently, while the current expected move is only a move of $16. All right, so that will put it at about $81 on the low end. So a strike of 70 is pretty conservative. All right, so maybe I go up a little higher to this $75 strike, and we can see it's paying anywhere between $260 and $287 right here, right now. All right, so if I was going to do a short strangle, then I'll go ahead and select that. However, now let's go ahead and select our call strike, right? Because since the market is moving down, what I want to do is I want to collect money from the call side as well as it is moving down. And let's say if we were to go for around the exact same delta, then I would probably come here to about this $120 strike, and we could see that I'll get paid anywhere between $120 and $143 right here, right now. And that sounds good to me, so let's go ahead and add it to the ticket. All right, so we can see that I am going to be paid $405 per contract for selling this short strangle. And that is a pretty good return on our investment. Now from here with this strategy, what you're hoping for is that the stock price stays within the range that you set. All right, so we would want for TQQQ to stay between $75 and $120. All right, if that happens, we make our money and we go about our day. And I normally exit the trade anywhere between 50 to 80% profit. All right, I always use the term, I am here for a fun time, not a long time. As you see what happened yesterday, things can change quickly. So once I hit my profit targets, I'm out of there. All right, and I even put in the community, we had several trades open, and there were like 5 or 6 of them that I exited about an hour before the tariff drama began yesterday. Now, of course, I had no idea that that was going to occur. All I knew was I had hit my profit targets and it was time to get gone. All right, so I am here for a fun time, not a long time. All right, and as far as exiting this strategy, you can do one of two things. Now, if you have a decent sized account, what I like to do is just buy the shares. All right, so if the stock price were to go down and threaten our $75 price target, our $75 strike, then I would just accept assignment of the shares. And then also on the flip side, if the stock price were to rise and then threaten our $120 strike, then I would go ahead and buy the shares in order to make the position covered. All right, and so that's why I love doing this on a broad-based ETF like TQQQ, because typically the market will give you enough time to purchase the shares, right? You don't typically have to worry about the stock going up, 20 to 25% in a day, because like a stock like Tesla, because their leader tweeted something. All right, this is the total market. It's just a leveraged ETF to the market, so typically you would have time to make that adjustment if need be. All right, but let's say you have a smaller account. Let's say that you're not able to do a short strangle. Well, you can easily just turn this into an iron condor. All right, and to do that, you would just buy legs outside of the strikes that you already selected. All right, so here on the call side, since we sold to open this $120 put, then I could buy to open any strike higher. All right, so let's say we want to do a $15 wide iron condor. Then I would just come over here and I will buy to open this $135 strike. So I'll add that to my ticket. All right, perfect, it's added. And then I would do the same thing on the put side, is I would buy to open this $60 strike here. So boom, that is open there. All right, now this does a few things, right? It lessens the amount of money we're going to make, which we can see here. We're still going to make $270 if the stock price stays within our range. But however, it also drastically decreases the amount of money that you need in order to put on the trade to begin with, right? If we see our max loss, that is right over here, it says $1,230. All right, because that is our max loss, that is also the amount that we would need in our account in order to put on this trade. And so that is great there. And if we look at this P&L curve, we can see that we have a pretty wide range for the stock price to stay in order to just make our money and go about our day. However, if the trade were to go against us, then we could use either of the extra strategies that I just mentioned. All right, which also includes just setting a stop loss. Okay, now that is on the option selling side. However, what about option buying side? All right, I love purchasing leaps after huge sell-offs. All right, and when sell-offs start to occur for the broader market, I love looking at stocks that have already had a little bit of a sell-off. And so let's look at Meta. All right, so we can see Meta went down 3.85% yesterday and is currently around $705. However, Meta was already selling off prior to yesterday's move, right? It had hit a high of $796 maybe a little bit over a month ago, and it has been slowly going down ever since. Now, I'll leave the fundamental analysis for another video, but Meta is worth a lot more than what it's selling for currently. All right, even analysts have it currently priced at around $900. And so at $700, it's already a steal. However, if the market keeps dropping, then Meta will drop with it and give us an even better price point. Now, when I am buying leaps, I always look at the stochastic. So we can see the stochastic down here, and the stochastic is just a momentum oscillator that shows you where momentum is taking a stock. All right, quite simply, if it is pointing downwards, then the stock has downward momentum. And if it's pointing upwards, then the stock has upward momentum. All right, and so we can see that Meta is already in an oversold position, as it is under a value of 20. Okay, so it's way down here. Now, all I'm doing is I'm waiting for the stochastic to start and turn back upwards, which will mean it now has upward momentum. Okay, and so I will wait for that to occur. However, if we go and we look at the options chain, first off, for it to be a leap strategy by definition, it needs to be a further out expiration than 365 days. And so I would come down here and select any date that's outside of 365 days. So let's say we select this date that is 433 days out from now. All right, and so typically I would go to about a 0.70 delta, and we can see the 0.70 delta is at the strike of $640. All right, the last thing you want to do when you are buying leaps is go way far out the money, select one of these strikes that are way out here. Now, could you make money off of it? Obviously, yes, you could. However, you are decreasing your probability of profit by a very large amount. All right, so in order to give yourself the highest probability of profit, then you'll want to come somewhere in the money. And normally I will go anywhere between a delta of 0.70 to a delta of 0.80. All right, so the 0.70 delta here is at 640. And so I would just buy the contracts here. Now, obviously, Meta is a higher price stock. And so in order to buy leaps, you spend a little bit more money on the contracts. However, this is just an example. Obviously, there are thousands and thousands of stocks out there that will be amazing opportunities if we continue to get the sell-off that we may possibly get. All right, and so here where these dotted lines are is where Meta stock price is currently. And so if we look at this price right here that says current P&L right there at the top, And we can see as the stock price goes up that it'll be worth more and more and more. And if it gets to this $800 mark, then that would be your break even at expiration. However, in between time, obviously as the stock price goes up, the value of the contracts become more and more. And then if it continues to go up, right, like I said, the analyst said that the price target is around $900 currently. Now, if we just look at that $900 mark, then we can see we would make drastic amounts of money. All right, so here's about 900, you would make 15,870. All right, on expiration, we can see it will be worth $10,225. However, if it would reach that in the near term, then we can see it says 15,874. All right, now this was just an example, but what you need to do while the market is possibly having the sell-off is plant your seeds. All right, if you don't get anything else from this video, make sure that you plant your seeds, because planting your seeds is the only way that you can reap a harvest. All right, but that is it for this video, guys. I hope you learned a lot. Let me know down in the comments below how you plan on trading this market. And again, if you're looking for a cool community to join, we would love to have you in the Trader Freedom community. But with that, I will see you guys on the next one. Peace.